who do I want to work with, who is like-minded, coming up with a schedule. On Mondays, am I connecting with my database? On Tuesdays, am I connecting with realtors? Having an actual schedule.
Mr. Picker, thanks for joining us. How you doing, man?
Doing well. Doing really good. Thanks for having me.
Yeah, absolutely. Rumor is you're one of the greatest golfers in the mortgage industry. What's the handicap at these days?
It's the handicap's lower than probably what I play to. I'm around a scratch. I would say I'm more consistently playing to like a 2 or a 3. It just depends on how much I get to actually practice and play. Really. So it depends on the time of year.
Recently, you had a party at your company. Took some of our team members over there. We came and blasted the party. Tell me about that. It sounded like it was a great time. They said they love getting to know everyone.
Yeah. So my partner at work, Rick Trott, we run the region together. He has a little history in horse racing. So his father-in-law is a retired Maryland jockey that's in the Maryland Hall of Fame, has run in derbies and stuff like that. And so for years, Rick wanted to buy a horse, and his father-in-law wouldn't let him. He said, "Look, it's a waste of money. You're going to lose on it, this and that." And then finally, I don't know, around 5 years ago, give or take, he got his first horse. And right now he's horseless. He's had 3 horses claimed. So I don't know a lot about horse racing, but you can put him in a claiming race. And 2 of his 3 horses did pretty well, and they got claimed. So we've always gone to the track when he's had horses run. Last year was our 3rd year, I think, we call it Day at the Races. So we basically rent a big room down at Laurel Racetrack. We bring in an economist that kind of talks about the state of the market, what's been happening, doing a forecast into the future. And we usually have roughly 100 to 125 people. We invite a bunch of referral partners, realtors, financial advisors, any kind of vendors we deal with. And we bring them in and we have like an hour and a half talk about that. We have some cocktails beforehand, then have the meeting that's like maybe an hour. And then afterwards, we sponsor a race. We call it it's the SWBC Mortgage Race. And so that usually runs around 3 or 3:30. And everybody, it's a very unique experience. It's really cool. It's different.
Yeah, our team was talking about how cool it was and different it was. And great job. So tell me about SWBC Mortgage. How long have you been there for? What brought you there?
We're based out of San Antonio. So when you go down to Texas, everybody knows who SWBC is. We're not as well known on the East Coast, which was a big reason I came here. I wanted to try to help grow that presence here. I've been here for almost 2 years. Prior to that, I was with Southern Trust for about 9 years. Prior to that, First Mariner for 11. So I really don't switch companies very often. And it was just a really good opportunity at the right time for me to come here. So I joined up with, like I said, my partner, Rick Trott, had been here. There's a group in Maryland that was part of Corridor Mortgage. SWBC acquired Corridor a little over 6 years ago. So we have a kind of a core group in Maryland. We have some offices for our region. We don't really have lines. So we have offices for our region that are kind of up and down the East Coast. We have one out in Colorado. As a company, we're in 44 states though.
Cool.
It's a great company. It's unique from a standpoint that for me, it was the right fit. It was bigger than the company I came from. So we're big enough to kind of handle and weather the storm of the markets we've been in the last few years, but we're not so big where you're another number. We're not there are some companies like a cross country guaranteed rate. They're so big that you can kind of get swallowed up in the head count, that kind of thing. So, our CEO, Susan Stewart, used to be the chair of the National MBA during COVID. She's incredible. She's a really great leader, and they treat the employees really well. So it's been awesome.
I've heard some outlooks that we're going to see pretty much a similar stuff 2025 as we did for 24. What do you guys think?
It'll be interesting. I mean, when we got halfway through 22, that's when we started seeing rates really going up at a rapid pace. 22, the second half of 22 wasn't great. 23 was a real slog, but 24 was better than 23. I think we had quite a few people at our company that increased their volume pretty significantly in 24 compared to 23. And I'm pretty optimistic that 25 will be better than what we had last year. But a lot of it depends on inflation and jobs reports. I mean, that's really what's driving mortgage rates. Overall, it's a very solid market. I mean, our local economy with government, military, stuff like that has always been very strong. So I think locally, it's still going to be a very good market, but it requires people to put the work in. You can't just sit back and wait for the phone to ring.
Of course.
That's probably been the biggest change. I mean, I got into the business in 2001, and for basically 20 to 21 and a half years, it was an incredible market. We had some swings up and down, but overall, it was really incredible. And then obviously 22 came, and the last 2 or 3 years have been rough, and it kind of forces you to get back to basics. We've had a lot of people, realtors and mortgage people, get out of the business. And I think this latest uptick that we've seen probably since when we saw rates were coming down in August and September, and then we saw them turn right back around. And really, I think what that's going to do is it's going to kind of prolong the market turning a little bit, which is going to push more people out, which creates market share opportunity for those
Yeah.
people that are in it and doing business the right way. But yes, it's a challenging market. You really got to deliver a very high level of service, have competitive rates, have competitive programs.
That's a good outlook. We're kind of saying the same thing. We're hoping like make 25 better than 24. For a while we were pitching survive till 25, and so like you said, 24 is better than 23. We're hoping 25 is better than 24, and eventually there'll be a strong market. But yeah, I think you guys are thinking about the right way. You spoke about some people in your company who were able to significantly increase their business. What were the things that they did in order to do so?
Our company, we came out with, we were trying to figure out with the market being slow. I mean, one of the things about our organization is we're very much a sales organization. Our CEO started at the company in 88. She was the first 10 employees for the mortgage company, and she started out as a processor. She was an originator. Now she's a CEO. Like, she's gone through all the progression. The amount of support we give our salespeople, probably a lot more than what some other companies do. So one of the things we did, we came out with a marketing challenge where you would kind of log your activity. Basically, the amount of points you had for that activity would put you into a drawing where you could win a $2,000 voucher, like a gift card for travel. We have a internal sales coach. He's a branch manager out in Nashville. He does a weekly sales call, 30 minutes with all of our LOs, and a lot of it's idea sharing. I think a lot of that stuff really propelled a lot of people. I mean, you hear some people have outside coaches, which, they can work, they can be expensive, but at the end of the day, it's them having accountability. Really what it comes down to is, can you look yourself in the mirror and, feel good about the work that you're putting in?
Sure. You'd mentioned that, you're kind of, in a sense, you're back to the basics. What are those things that maybe you weren't doing when the market was roaring, so that you've started to do again?
Yeah. So a lot of it, honestly, is I've had a successful career, but I think like anybody, you can get a little, you just kind of get to a point where you're riding your system, and you can get a little bit, I don't want to say lazy, because I'm not a lazy person, but you're not doing some of those things. So for me, I kind of looked at my list of referral partners. How often am I talking to them? When's the last time I went out and actually tried to meet with some new salespeople? Because what happens is, what I realized was, as the market was turning, some of the agents that I was dealing with a lot, they were suffering as well. Their business was down. So if I'm not making new relationships or helping the ones that I already had relationships with, how can I bring some value to my current relationships and the value to the new ones? I reset and started making more of a schedule. When am I going to do marketing sales calls? Am I going to go have more lunches? Am I going to take some people out to golf? Just kind of being in front of people, and I want to hear about their business. At the end of the day, we're all in sales, right? So whether you're a realtor, mortgage guy, title guy, like, what are you doing? How are you connecting with people? And trying to figure that out. It was almost like a joint coaching session, right? Like, what are you doing that's working? What motivates you? And trying to connect on that level. And honestly, I'm 45, been in the business for over 20 years. And I've kind of gotten to a point where I want to work with people that I enjoy working with. When you're in your 20s or 30s and you're early on and you're trying to scrape and claw for you'll work with anybody. Some people can be more stressful. They can suck your time. So it was kind of recalibrating and looking at, all right, who do I want to work with? Who is like-minded, stuff like that. So it was just kind of a matter of buckling down, coming up with a schedule. On Mondays, am I connecting with my database? On Tuesdays, am I connecting with realtors? Having an actual schedule for sales activity.
It's so important. I was just talking with a friend of mine who's the CEO of Compass Coffee. If you haven't had their coffee, highly recommend it. And so what he was saying is, because I was talking to him about working out and everything, he's like, if you are working out based on you being motivated, then eventually you will become unmotivated. It will never work. But if it's on your schedule and it's not an option for you, then it becomes a habit eventually, right? And it's the same thing with sales stuff. I love that idea of schedule. It's on there. Don't set meetings during that schedule. Knock it out, and no excuses.
And that's something I've tried to, we had our sales rally in September, and I was speaking to like different segment, like we were doing just around like people, we'd rotate rooms and you bring people in and you're kind of sharing ideas. And one of the things I tried to emphasize, I said, everybody's programmed different. I'm a scheduler. Some people aren't, but creating a habit, if you can schedule it for, and actually follow that schedule for a couple months, then it becomes a habit. Like now, stuff that's on my schedule, I don't need that timer. I don't need that to go off of my calendar. I know on Mondays what I have to do. I know on Tuesdays what I need to do. And that's kind of, you got to create that habit. And just like you said, I mean, working out, whatever you're doing in life, you got to create that habit somehow.
So what are activities you guys use to stay in front of your referral partners and to be, whether it's lunches or golf? Are there other things you guys are doing differently this year?
Yeah.
Or?
One of the things that I've gone to that I've gotten really good feedback on is I use BombBomb Video, which is I don't know if you're familiar with it. It's a
Yeah, I am.
messaging service. So on on Mondays, I will send out 5 videos to past clients, basically just touching base with them, saying hello. It may be somebody I
Mm-hmm.
did a loan for 3 years ago. It might be 10 years ago. It's just kind of trying to reconnect with them, saying hi to them, letting them know that I'm here if something changes, if they need to refi or purchase, or if they know somebody. It's just really just dropping in and saying hello. Everything's so electronic in this world that sometimes I may not meet a client face to face during a transaction, right? So the video messaging is putting my face in front of them. Now they know who I am. They can hear my voice, that kind of thing. And but I'll use the BombBomb videos. I'll use it to update agents when I have a contract. I go through my pipeline, and once a week, I'm sending updates to the buyer's agent and the seller's agent on what's going on in the transaction. It's another way for me to keep my name and face in front of them. And it's amazing how many of them comment and say, I love the video messaging. This is awesome. It's very
Yeah.
personal. It's great. On top of the fact that you're actually updating me. I don't hear from lenders on if an appraisal's in or if the loan's
Yeah.
been approved. Like I don't hear from people. So you're giving me an update, but I also really like the video messaging. So that's been one thing that I have really committed to in the last probably year and a half because it's just more personal. There's nothing ever wrong with a phone call, but if you're going to do an email or a text, maybe do a video message.
I like that a lot. I mean, we can do a video and send it out to the masses, but it's not personalized. It's obvious that it's specific
Yes.
to that file.
Yep.
Let's say someone is in a spot where they can't pull up a video. Like, does it actually does it show you what the actual text verbiage is in that if you can't pull up a video or not?
That's a good question. I don't know that.
Yeah.
I haven't had anybody have an issue with it. The nice thing about BombBomb is you can track whether the video has been watched. You can actually see the engagement level.
You've been in it for a couple of years, this industry, over 1 billion of loans, processed. Well done. Congratulations.
Thanks.
When you look at kind of where we are today, would you compare this like the hardest part of your career? Would you compare it, not as hard? Where do you rate today's, age?
I would definitely rate it the hardest. I got in the business in 01. I was in it during the financial crisis of 08. At that time, I was in my mid to late 20s. I just become a branch manager. I just basically had blinders on, had my head down. A lot of people complained about the crisis of 08. I wasn't doing a lot of that type of business that caused that issue. My business actually went up and it never bothered me, right? It didn't have any effect on me whatsoever. The last 2 or 3 years has had an effect. I mean, everybody's business has been down. You have to work a lot harder. It's been one of the hardest. I mean, these are the highest rates have been since 01 when I got in the business. I got in the business in July of 01. Rates were in the mid 7s. September 11th happened a few months later. We went through years of refi cycles and good purchase market, stuff like that. So this has just been a different animal and it's lasted a lot longer.
Yeah. And when you look at today's market too, like what are there new products, or let's call it like the online, mortgage companies that are promising people stuff that maybe they can't execute on? Or what are the other issues beyond just high rates that you're seeing today? Like, I'm going to make up an example. Like I hear people say, someone online just offered me XYZ rate. And like, I don't know if you'll actually be able to utilize that.
Yeah. I mean, the challenge is you have some of these lenders, online lenders, like what you're talking about, that are trying to remove the LO, the loan officer, from the equation. And basically what you run into is you're losing that customer service. We're very much a customer service business. There's no doubt that I separate myself a lot of times. If anyone ever reads any of my reviews from my customers, probably the most repeated thing in there is that I'm always available. I'm always around. I can answer questions, stuff like that. And to me, a transaction should be a very enjoyable time for somebody. You're buying a house. It's very exciting. And it can be complicated if you don't do your legwork up front, or if you're dealing with a lender that maybe doesn't know what they're doing or they didn't do their due diligence, and it can become sloppy. And there's no need for that. So some of these online places they advertise a low rate, for example, but then the devil's in the details with what they're actually charging. Or they advertise this low rate and people get so fixated on the rate and they want to save an eighth, but is it worth saving an eighth rate to basically have a very messy transaction? Like sometimes I go up against a credit. All right. Well, we know that there's a lot of real estate deals that happen in the evening on the weekends. If you need a pre-approval letter to submit an offer on a Saturday night, Are you getting your credit union guy on the phone? Probably not. A lot of times sellers agents, they don't want to deal with an out-of-town lender. They want someone that's local, that actually there's accountability, right? And I tell customers all the time, I'm like, if you have a problem, are you going to be able to drive to Oklahoma to get to that online lender? Or can you come to Columbia, Maryland, where I am, if you're buying in Maryland, DC, or Virginia?
I think the good news too is real estate agents see the value of you guys too. And I hear them all the time talk about use a local lender, because of the disadvantages with the online lenders. Also, the underwriting for some of those online mortgages can take quite a while, which is a big issue when you need to close in 2 to 3 weeks for a lot of these offers.
Yeah.
Right.
Yeah. And that's the challenge with these online lenders. There's just every time you call, you may get a different customer service person because you don't have a loan officer or a main point of contact. They bring in your loan. You have technically a loan officer you deal with up front, but then it gets passed through their processing department. And now you're dealing with a processor. It's just not, you don't have one person that you're dealing with all the time.
So what's the one thing you would stop doing if you were a loan officer today that maybe you did back in the day?
One thing that's been a common theme lately is I've tried to tell LOs, control what you can control. I think a lot of LOs are a little down on the attitude because rates have been high and the market hasn't gained momentum. So instead of complaining about not doing enough business or the market not being good, stop complaining and take control of what you can control. You can control your networking, your sales calls. You can control your database, doing the little things you need to do. So stop complaining about stuff. You can't control where rates go. You can't control how fast houses are selling or how low inventory is, but you can control your activity. So go do that. Some people are very happy closing 5 million or 10 million a year. Some people may be closing 15 million a year and their goal is to get to 30 or 40 or 100 million. So it depends how the person's programmed. But if you're used to doing 15 million and now you're doing 10 million, work a little harder.
Sure. My team put together some rapid questions for you. Your dream golf partner?
I'd say my dad. I always enjoy playing with my dad. He'll be 72 this month. You just never know when that last round's going to be. So I always try to get around him with him whenever I can. We do some trips together. He was in Scotland with me. And
the fact that you guys got to play St. Andrews together, that's unbelievable. What's the best kept secret about the mortgage industry?
I would say the flexibility. I've heard people over the years that I've worked with that maybe get frustrated in this market, for example, that said, I don't know if I'm going to stay in the mortgage business. I go, first off, what other job can you go do that you have the flexibility and the income potential that you do in the mortgage business? It's great. For the most part, I can make it to all my kids' stuff. My dad was liquor sales for 45 years. He never took a manager role because he wanted to make sure that he was always at all my practices and games.
What's the worst part of the mortgage industry?
Real estate and mortgage, it's kind of feast or famine a lot of times. Very rarely do we get a flat market, right? You're either high times and you're complaining because you have no free time, you're so busy. Think back to the COVID days, it was ridiculous. And then you have what we've experienced the last 2 or 3 years where everyone's complaining because they're not busy enough. 24, for example, was a much better year than 23, but I felt like it was a very start and stop year. I would get busy for a couple weeks and then it would get slow for a couple weeks. And then I'd get busy. Like there was no consistency to it. And I talked to a lot of other mortgage guys and some mortgage people or realtors, and they all felt the same way. I would like there to be a little bit more consistency, but that's just kind of the world we live in. It just doesn't really work that way.
Well said. One tool or resource every borrower should use when looking to buy a house?
I would say a lender. Like it's one of the things that I run into is I'll talk to some people, they want to buy 6 months from now. I'm like, all right, well, let's start right now because you can't anticipate when your house is going to come on the market. If you find a house a week from now, you can put an offer in. If it's 6 months from now, you can put an offer in. But if you don't do it now, and then that house pops up 2 months from now and you haven't started, it's a Saturday, it's 6:00 in the evening. Offers have to be in by Sunday at noon. You may end up missing out on that house. Like to me, it doesn't cost you anything to do a pre-approval, but some people are hesitant to do it. They think their scores are going to drop or, whatever it is, whatever the reason is. And so for me, it's utilize the lender, get that stuff knocked out, and it just puts them in the driver's seat to be ready.
It's never too early to educate yourself on the process and everything that you need to do. And I think people think, if I take that meeting, then I'm held to something, but you're not, right?
Exactly. And it helps them with their budget. If they're looking 6 months down the road and I run numbers, they may realize, I need to save another 5 or 10 grand to do what I want to do. It gives them time to do that. So it's just there's nothing that bad can come out of doing it early, basically.
What's your favorite family activity on the weekend?
Really just hanging out, like having everybody together. We went on a hike, we did some game nights, just having everybody together, to be honest with you. Our lives Monday through Friday, actually most weekends too, we're going in a lot of different directions. My oldest drives now, which helps. but it's, what happens is we're very rarely together because everybody's got different schedules with sports and school and, just all that kind of stuff.
Well, look, I mean, one thing I remember clearly with talking to a lot of the referral partners we both work with is they always talk about they love working with you. And they're like, he's always available. He solves problems. It's like, that's kind of two really good pieces of advice, probably. Always be available and solve problems. And they've always talked about how great you are doing that.
I appreciate it.
Yeah, man. And then you got a good golf game. So I appreciate that. And I'm taking some virtual lessons, trying to get to your level. Went from a 12 to a 7 this year.
Oh, okay. Nice. That's a big jump.
The biggest jump. That's a big jump right there. The next jump, maybe from 7 to 6, if I'm lucky.
It is. I mean, as you work, like now you're down to single digit. And so that next progression, getting down to that 4 or 5, and then down to that 2 or 3, like it is a gradual thing. That's awesome. 12 to 7, that's a big jump.
Any new programs that you're seeing that might be a little different, that are more creative than in the past when the markets were just roaring? Or are a lot of the products about the same?
Our company is a direct servicer, so all of our agency stuff, so think Fannie, Freddie, VA, FHA, USDA, we service all that. But we also have some outside investors that do non-QM jumbo stuff. A company of our size and financial strength, we can kind of sign up with whoever we want, really. So we have a lot of really cool second home investment property programs. What happened a few years ago is Fannie and Freddie basically took a step back, and with the current administration that's going out Biden, they basically said, we don't necessarily want to focus on the second home investment property market, helping wealthy people get wealthier. We want to focus on home ownership and helping people get into houses. So that was kind of what they were focused on. And so they pulled back. They basically took second home programs, investment properties. The rates are higher. They basically made them a little bit more unappealing, essentially. What that did was it allowed private money to come in. And basically, so you have some of these outside private money investors that are offering second home investment property programs and rates that are probably 0.5% lower than what a Fannie Freddie rate would be. So like we have some offices that are in certain areas of the country that are second home market. And so you have to have that kind of stuff. The debt service is another program where you qualify for an investment property with no income. You're qualifying strictly off the rental income for the property. So the appraiser is going to give your comp rent and it gets weighed against what the mortgage payment's going to be. And that's kind of how you qualify for the loan. That's another cool product. Another one we have is a asset depletion, where you can basically take someone's total assets and you basically divide it by 7 years, and that's your qualifying income. I like to call it more of a common sense. You have someone that has really good credit, has plenty of assets, but for whatever reason, maybe their debt to income ratio is a little off, and you can use their assets as a form of income.
On that second product where, your rental income, you're utilizing that, you're showing what you qualify for. What time period do they look back on that, or is it all based on estimate?
Whenever you buy an investment property, an appraiser is going to do what's called a comp rent schedule, and that gives you the comp rent for that property. And they're literally, say the comp rent is $2,000 a month and the mortgage payment is $1,800 a month, and that's kind of how it's measured. So different investors may have a different ratio. Some of them will go to 75%. Some of them will go to 125. So there are cases where your monthly mortgage payment can exceed what the comp rent is. But then there's other investors that may require you to have your payment be less than what the comp rent is. So it just depends on the investor you're dealing with.
Cool. It's a lot of buzz with AI right now, of course. Are you guys utilizing AI throughout your current processes, or what does that look like?
AI it's tricky because it's obviously still relatively new. On the marketing side, you'll see a lot of people using it. You can typically tell social media posts what's AI and what's not for the most part. You are seeing, I have heard some companies trying to use AI for underwriting. I don't know how that will play out. That to me right now in the infancy stages seems a little crazy, because you think as a lender, you're on the hook for these loans, and there's rep and warrants and stuff like that. So it's kind of relying on a computer to do some of the underwriting. I mean, they're trying to tout efficiency and stuff like that. I just think it's really early for that. There have been cases where we have purposely played around. We're looking up a guideline. We'll go to AI and kind of put it in there to see what it comes back with, and we already know the answer, and sometimes it's been wrong.
Yeah. That makes a lot of sense. All right. So there's a lot of loan officers out there, actually not nearly as many as there were a couple of years ago. But if someone's making a decision on who they should work with, I mean, what do you recommend they do?
My biggest resource is my database from over the years. So I rely a lot on repeat business from people. Giving someone a good experience, a competitive rate, a high level of service, stuff like that is in hopes that they're going to come back to me in the future. They're going to give my name out to people. Now with that said, sometimes you get people that they don't know where to start. So like if I have a customer that's maybe moving to a market that I'm not licensed in, for example, like New York. And I had someone that was moving up there. I said, well, look, I can't lend up there. Whoever your realtor is, I would ask them for a good local person. A mortgage is a mortgage, but you do need to know, like if it's a condo in Florida, that's a little different animal than a condo in DC or Northern
Yep.
Virginia. So there are little intricacies, things like that can be a little different, but really at the end of the day, you want to do your research. They say, well, I spoke to someone else a week ago. I'm waiting to hear back from them on a pre-approval. And I said, it's been a week. And so I hear from them and then I have the
Yeah.
pre-approval done for them the next day. I'm like, why would you even be waiting on that other person? Like,
Sure.
if this is an indication of what their service is, really doing your homework, making sure, like, look at their reviews online. All these reviews online are controlled by third parties. So I don't have an influence of what someone puts on a review online for me, right?
Yep.
And asking your agent who they work with, doing research on people to make sure they're a good local lender that has a high level of service. They have good communication skills. They're not going to go dark on you. They're going to pick up their phone. They're going to answer emails or text messages. I mean, those are all things that you need to watch out for.
Yeah, I agree. I would agree. Cool, man. Well, hey, I really appreciate you coming on, catching up, and we got to golf this year.
Yes, absolutely, man. I appreciate you having me on. This was awesome. I always watch the, the stuff on social media with your podcast and stuff. You guys are putting out good stuff. The mortgage world, real estate, title, it's a very small world. So it's cool getting to see everybody that you feature on there. It's been awesome watching.
Awesome, man. I really appreciate it, and we'll be in touch soon. Thanks, buddy.